Alright, for this one we are going in and we're going to start looking at Chapter 3, Adjusting Entries. What you're going to need to pull up is page 3 of the actual comprehensive problem. That was the thing that we printed out in that very first video that had all of the entries on it. We have already journalized all of the transactions. We have posted them to the ledger. We have prepared a trial balance due June 30th. So now where we're at in this process is they have given us information that they would like for us to journalize, and so we need to journalize the adjusting entries and post to those entries, and this is what we find in Chapter 3. So that's what we're going to be looking at as far as the comprehensive problem goes, is actually doing these journal entries. So you want to print this out and have it in front of you, because as I work these particular entries, I'm going to move to another page, so you're not going to actually be able to see the entry. The other thing that you need to have is you do need to have the general ledger through June 30th, and so you can go in and you can print out where I already have the total answers through June 30th, or if you've already gone through and corrected it and you have your journal entries through June 30th, you can pull those up and you can finish up the ledger looking at that. Alright, so the first entry on here, it says insurance expired during the month. So I want to go through some keywords. If you see the word expired, expired means that we have used it. It means that this is the expense. Okay, so that's actually what we're going to be using here as the expense when we see that word expired. So if it's expired during the month, what that means is, if you recall, we had that in a prepaid insurance item. Now, this prepaid insurance is an asset. This asset will be decreasing. So when we decrease assets, we decrease them on the right side as a credit. The other side here would be the insurance expense, because we've actually used that. That is an expense. We increase expenses on the left side as debits. So our journal entry that we would see here, this was happening on June 30th, because this happens right before we prepare statements. So we have June 30th, and what we will have here is insurance expense will be our debit for the $1,000, and the credit here is the prepaid insurance for $1,000. Now, we could have figured this out if they had told us 1 month had been used, because if we looked at our trial balance, what we would have found is that we had $12,000 in there. And if you remember, it was for a 1-year policy. So if we had had to figure this out, we could have, by dividing it by 12, that would have given us $1,000 every month. But they actually gave it to us in this particular journal entry, so we were lucky there. All right, the next one that we are going to be looking at is B, and it says depreciation of pool structure for the month. Now, depreciation is going to be done the same way every time. Depreciation's entry will be depreciation expense is going to be your debit account, and this account is going to be for 7/15. And then you're going to have the accumulated depreciation. In this case, it is accumulated depreciation, and this is for the pool structure. And so that is going to be our credit account for 7/15. If I look at C, we're looking at depreciation expense here. So I would have depreciation expense. This is for the fan system. I then would look at the other side. This is going to be the accumulated depreciation. That will be for the fan system. And the amounts here would be $260 is what our depreciation is. We will learn how to do depreciation, but we're not going to learn actually how to calculate it until chapter 10. So up until that point, it's going to give you the amount of the depreciation, and you're just going to take that and put it in. The other thing we have is depreciation of sailboats for the month. So here I have my depreciation expense for the sailboats, and that is going to be for $900 as a debit, and the other side is going to be the accumulated depreciation for the sailboats, which would be a credit for $900. And so that's how I would journalize those depreciation our depreciation expense. The next one that we have here is looking at an accrual item, and so this is going to be a wage accrual for E. And so what we find here is that we have employees that have worked, and they have worked through the end of June. So they worked, but they have not been paid for this yet. And what we have to do with this is that we have to accrue that expense. So anything that has been earned by these employees and we have not paid them yet, that money, we have to accrue it at the end of the time period. And so what we're going to have for these particular entries are you on June 30th, what you're going to see is you have to accrue the expense, and so we have to record that expense of $810. The other thing that we have is we now will have a wage payable because we owe them this money. Now, they're not going to get paid maybe till next week, but we owe it to them because they've already worked. And so being that we are going to prepare statements, we have to make sure that our expenses do match our revenues. And in order to do that, we have to make sure that all of the expenses that happen will really be there for all of that. So it would be the wage expense would be our debit, and the credit would be our wage payable. So those are some of the things that you really just kind of have to look at. In the next step is going to be going in and looking at the different amounts and being able to post these to these different accounts. So that first entry that we made, which was for insurance expense and for prepaid insurance. Well, the insurance expense, we don't have a whole lot that we're really looking at there because this has not been done before. So you'd go to the ledger, and it's account 516 in the ledger. And so what you're going to do for the insurance expense, and like I said, it is 516 in the ledger. You're going to come in and you would put, 630. You would not put any, in the item category, you would let us know that this is an adjusting entry. So you would put the adjustment there underneath items. And then the posting reference here would be the general journal, let's say page 3, if maybe we're on page 3 already. And then it would be the amount, and the amount would be $1,000 as our debit, because remember we do have the debit, we have a credit, then we're going to have the balance for the debit, balance for the credit. And it'd be the $1,000. And so that is what you would see in that insurance expense column. Then you would have to go in, because this is account 516, you want to go back, and in the reference column you need to put 516 in that reference column. You then move forward and you would find the prepaid insurance in the ledger. So what we have for prepaid insurance in the ledger, and that is account 114. Currently, what we have in this is we have an entry for June 3rd. And it is the General Journal 1. It was for $12,000, and we had a balance of $12,000 as a debit. Well, on June the 30th, we have an adjusting entry. So under item, we need to put adjustment. It was on page 3 of the General Journal, and it was for $1,000. Now, remember, we do have all of these columns, right? Let me make that a little bit clearer. We do have all of these columns in the ledger because we do have a debit column, we then have a credit column, we have a debit column, we have a credit column. Now remember, in this one, since it's a debit and a credit, we have the $12,000 minus the $1,000, and that's going to give us a debit balance of $11,000. It is account 114, so we need to go back and in this spot put 114. So that is what you would see in the actual general ledger, is that you would see these different amounts. For depreciation expense and for all of those, they are going to pretty much be the same type of thing, and they're just really entering it into the journal. So when you look at the journal, what you would see, let's say for depreciation expense for the pool structure, that is account 517. So with it, what you would have is you'd have the date of 6/30. The item thing that you'd list there would be an adjustment. It is on page 3 of the General Journal, and it is for $715 in that debit column. And so the debit here would be $715. The other side of this particular entry would be the accumulated depreciation. I don't have to find what number that is because alright, and the accumulated depreciation for the pool structures is 126. So I'm going to have the accumulated depreciation for pool structures, and again that is account 126. What I would have underneath it is I would have 6/30. It is an adjusting entry. It will be found on page 3 of the General Journal, and the amount of that one again is $715. But in this case, it is going to be under that credit side, and then you would have a balance of that amount. Now, the things to remember here, whenever we are looking at these, we need to make sure that we do put, those references in, all the way down. I didn't really leave enough room to put them all in, but do put those reference numbers in. These would work the same exact way. They would just go into, for depreciation for the fan system, that is going to be account 518. Depreciation expense for the sailboats would be 519. The accumulated depreciation for the fan system is 128, and the accumulated depreciation for the sailboats is 130. So you'll just do the same thing with those. For the last entry, we do have amounts already in the wages, and so we do need to, we will have to look at that ledger and what balances we already have in that wage expense. So we'll look at wage expense, and wage expense is account 512. So go to the ledger and find account 512, and what we have in account 512 right now is we have entries from June 15th. We have an entry from June 29th. And so the first one was found on page 1. The second one's found on page 2. The first one was for $3,900. And so we would have the $3,900 as our balance. The second entry was for $49.73. So we would have had a balance of $88.73. We then come in and we have the 30th. This is an adjusting entry, so we need to make sure we put that in that column. And the adjusting entries are found on page 3. This particular adjusting entry was in the amount of $810. So what we would do is we would go in and we would take the $8,873. We would add to that the $810, and so our balance would be $96.83. Because whenever we're looking at an addition, so if we have a debit and then we have another debit, we have to add those together, and so that's why we have the $96.83. We then have to go in and make sure that we do put account 510 would go in, or 512, I'm sorry, would go in right there whenever we post. Then we have the wage payable. And so wage payable doesn't have anything in it right now. That is account 222. And so what we would do with the wage payable is we would do the date of June 30th. It is an adjusting entry found on page 3 of the General Journal. And that is going to be a credit of $810. And so we will have a credit balance of $810. And so that is what we are going to be looking at when we look at these posting these adjusting entries to the general ledger. Now, once you get through posting these to the general ledger, several of your accounts are going to have new balances. And since these accounts have new balances, what we need to do is we need to then prepare an adjusted trial balance. And that's the last part of Chapter 3, is actually preparing this adjusted trial balance. We prepare an adjusted trial balance the same way we do the regular trial balance. We look at the ledger, we get all the accounts out of it. When you look at your header, however, again, it would be Wind in Your Sails is the company name. The title here, instead of just trial balance, would be adjusted trial balance. And it's still going to be for June 30th because that's the date that we're actually looking at here. So it would be June 30th. And so that's what you're going to look at when you are looking at the adjusting entries and how you post those adjusting entries. The next part is going to be looking at closing entries and financial statements.